Canada's housing market showing some signs of life, but not exactly everywhere. Sales have been picking up in some provinces, while others still appear to be cooling off. Well, TD Economics has come out with a new report on the topic, and here to walk us through the findings, what they mean for the homeowner and the buyer, is Rishi Sondhi, economist at TD Bank Group and author of the report. Rishi, great to see you again.
Yeah, absolutely. Good to be here.
It's a great report, too. Fascinating stuff. I want to start with the national view. You say Canada's housing market looks like it's in a gradual, modest recovery. So what's driving that recovery?
Well, I think to answer this question, you have to go back to the early part of this year. In the early part of this year, we were sort of under peak uncertainty. There's all the tariff rhetoric, and that pushed buyers to the sidelines as they kind of, cooled their heels and waited to see how things would evolve from an economic perspective. So fast forward a few months, we've seen some of those buyers come back. So that's been helpful, that pent-up demand. Also, you got to remember, since the third quarter of last year, the Bank of Canada has cut their policy rate by 175 basis points. That interest rate stimulus has also played a role.
All right, I think we have a picture to illustrate what's been happening here in terms of some bit of that recovery. We'll throw it up on the screen. Well, what is this telling us right now?
Oh, it's telling us exactly the story that I was telling just at the moment. We've seen an increase in home sales, particularly robust increase in home sales in Q3, but that follows a couple of weak months. Weak quarters in Q1 and Q2. So that's certainly the recovery story that I was telling there. What's missing from this chart is that, the level of sales. So we've seen some recovery in sales growth, but the level of sales is still quite low, right? So that speaks to sort of your modest gradual recovery narrative that we think will hold true.
All right, so that's the national story. We know that the national market's made up of many regional markets. I want to turn our attention to the biggest ones, who are also the laggards, Ontario and British Columbia. You describe them as both as the weakest, and prices expected to decline this year. So what's happening there?
Yeah, it's a well-worn story. This is a multi-year story for these two markets, but they are the weakest in the country. They're characterized by what I call buyers, or what the industry calls buyers conditions. So what that means is that for a given level of supply on the market, there's not that much demand. So that means that buyers can take their time when they're buying, and sellers have to make concessions in order to move their units, right? So under that circumstance, one would expect to see falling prices, and indeed that's what we're forecasting for this year.
Now, when I think about some of the challenges we're seeing in those big markets, I think of Toronto. A lot has been written about the condo market. What is going on there? Why is it struggling so much? I think you have a picture for us here there too.
Yeah, it's a demand and a supply story. So we can start with the demand side. Ontario more broadly, Toronto's economy is suffering under the weight of the trade war. So that's hurting demand, that's underpinning, or that's weighing on confidence, I should say. So there's that demand story. There's also, if you flash back a little bit, population growth has slowed in recent quarters. Rental demand is cooling, rents are cooling, and price growth has been coming off. Prices have been falling in the condo space for several quarters now. So it's not as an attractive a story for investors. So that investor demand is kind of waned a little bit as well. Now on the supply side, supply is extremely elevated, as we mentioned in our chart, and that's a function of a few things. First of all, there was robust construction in past years, and those units are completing, and that's pushing up supply. Also, investors that bought these units that have to, close on the mortgages that they pre-qualified for when they bought the units. Some of them are having trouble closing on these units, or don't want to keep the units anymore because of carrying costs, or because the economics aren't as attractive. So they're listing their properties. So we have elevated supply, weak demand. Economics 101 tells us in that environment prices will fall, and indeed that's what we've seen for several quarters.
Before you move on to the markets that are doing well, when you think about a market like Toronto or Vancouver, this hasn't been the case for the last little while, but people living in those markets got pretty accustomed to just home prices going up year over year, some years quite dramatically. Do they need to reorient their thinking around these major markets?
I think in the short term, yes. That'd be consistent with what we're projecting. We're projecting prices to decline in Ontario and BC this year, and we're projecting sort of only modest gains in average home prices next year. So yes, at least over the next, the end of this year and into 2026, we don't envision much in terms of much in the way of price growth. 2027 could be a little bit of a different story depending on how robustly population growth comes back. But certainly this year and next, the outlook is for a very subdued price performance.
Very much a different mindset than what we were going through heading into the pandemic, during the pandemic. I want to talk now about the markets that are doing well. The Prairies, according to your report, a bit of a standout. Saskatchewan and Manitoba. What's going on there? What's fueling the strength?
Yeah, I mean, the Prairie's, Saskatchewan, Manitoba, not something you typically hear in terms of leading the way in terms of prices, but it is a demand story and it's a supply story. Supply is low. Demand is being supported by relatively strong job growth in those markets and also affordability. Affordability has deteriorated in Manitoba, but not to the same extent of the other jurisdictions. And affordability is downright decent in Saskatchewan relative to its own history. So affordability is certainly supporting demand there. And tightening markets, making markets tight, right? So by that, I mean a lot of demand chasing, a given unit of supply, and you tend to see price growth robust in those circumstances. So tight markets fueling price growth in those regions. A little bit of a just different story for Alberta, where markets are more balanced. And that's because sales growth has come off the boil and made a steep slowdown in population growth and elevated uncertainty. So much more balanced conditions in Alberta vis-a-vis the other two prairie provinces.
The word affordability rings nicely in the ears of potential buyers, but Quebec and the Atlantic province, I understand, they're holding up pretty well, despite that they still have affordability challenges. What's driving the activity there?
Yeah, I mean it's an interesting story in Quebec. The GDP isn't doing that well. I mean the economic indicators aren't holding up that well, but the jobs market is doing surprisingly well in Quebec, and that's pushing up activity. It's helping push activity. At the same time, supply is low, so markets are tight, and you're seeing robust price growth in the Atlantic region. Same story, low supply, but it's really been robust population growth for several years that have tightened up those markets. They're getting a little bit less tight now as population growth is easing a bit, but it's still, still pretty tight conditions there, and that's helping support price growth.
Okay, so when I look at this question, I think, why are we talking about 2026? And I realize we're in the final couple of months, or at least in the final quarter of this year. So when you look across the country for next year, what's the outlook? Is this a broadly balanced market we could be talking about, or are we still going to see these regional disparities?
Yeah, I mean, for 2026, we envision sort of a gradual, modest recovery in sales unfolding nationwide. In the short term, we see some support coming through from pent-up demand. Then in 2026, we think job markets will improve up a little bit, and that'll help sales as well. Now, in terms of the regional disparities, those that have manifested in 2025, we think will hold true into 2026. By that, I mean, we think there will be underperformance in BC and Ontario. We don't think it'll be as bad as it was this year for those two markets because we do see some pent-up demand returning the market, and we do see some improving economic conditions that should support demand and prices. On the other hand, we expect price outperformances in by and large the same regions that have outperformed this year. So Quebec, the Atlantic region, Saskatchewan, Manitoba, supported by tight conditions in the near term. Although we do expect price growth to cool a little bit in many of those markets, and that's because we think job growth will kind of come off the boil in a lot of those regions. And then rounding it out, you sort of have Alberta, and we think Alberta is in line for a sort of another trend-like price increase, matching what we've seen thus far in 2025.